Hello everyone, good morning. Welcome to our strictly technical today's session with the very famous Fibonacci's, of course. I know that the most of you are using them, right? Or I want to believe that the most of you are using them because, okay, it's the way is very, I mean, it's very useful, either as if it is used by only for, I don't know, for support and resistance levels, or for breakout levels, entry levels, or just because you want to see where the current trend is seated based on the previous performance and etc. So yeah, it's I think this is something that is widely used, to be honest. So how many of you, out of curiosity, are you using it? So I will wait a bit until I have your feedback. I've also uploaded the PDF version, okay? Let me just check the questions. So no one is replying yet. Occasionally. Okay, yes, occasionally. Yeah, you don't need to use it all the time. It's like if you're following me, if you have seen my live analysis, etc., or sometimes during our webinar, if I see something, I mean, see some kind of a trend or something, I tend to use it, Fibonacci, to see whether is it in the mid of the trend, is it, so to see whether it has broken some significant Fibonacci levels and etc. So yeah, well, this is a beginners, yeah, this we can say that it's a beginners webinar, just because we're gonna demonstrate a very useful tool once again. It's something that I do every year because new people are joining the forex industry, the trading. So it's good to remind the existing clients how it works, um, how it could be used, and etc. So if you're facing any audio or visual issue, please let me know. If you have any questions, you know that I'm here to reply, right? And if there is anything more personal or something, and you want to ask it in an email, feel free to send it to webinars@wholeforex.com, and I will try to reply as soon as possible. So, Honorio, the document has issues. Oh, not again, not again. Why is that? Okay. Let me try something else. Let me try something else. So, if I save this, Control copy to the desktop. Okay. And if I choose, okay, I'm gonna delete the existing. Okay, I have deleted the existing. So, Fibonacci. Come on. Where is it? Just give me a second, guys. Okay, I'm trying to solve the issue, but if it doesn't work still with what I'm gonna do right now, I have another idea as well. So I don't know. I think it's the GoToWebinar thing that is lately doing this kind of problems. Okay, here it is. Open. Okay, let me know. I have uploaded just now once again the PDF version. Let me know whether it works now. If not, I just came to my mind another idea. Oops, sorry. Which is with a weak transfer. So if it doesn't work, I will try with this way. So let me know whether it works, guys. Let me know that whether the new PDF works. Same issue. And I don't understand the issue. That's the if we haven't really identified what's wrong. Never mind. Okay, I'm gonna the PDF is already working here. So to some of you it's working, to some it's not. Okay, never mind. Never mind. I'm gonna send also a link from which you can. So if for some of you guys is working and from some others is not, maybe you have cookies on your PCs. Maybe you need to clear cookies. Maybe you don't have a PDF Adobe Reader on your PCs, and that might be the reason. But nevertheless, I'm going to provide a link in which you can download it as well. So don't worry. Don't worry. I'm on it just now. Okay, so don't worry, guys. For those that is not working, I'm going to send you a link and you can download the PDF from using this link. Okay. Okay, so we are done with the PDF. Let me go through the disclaimer as usual, and because we need to start ASAP. So this material is it's provided as a general marketing communication for informational purposes only and does not constitute an independent investment research. Thus, nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the user is solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved. Take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure. Okay? So, admin is out of the way. Perfect. So, for any risk disclosure that you might need, we have everything on the website. Feel free to check the documentation. It's there for you. Okay? Okay, and we are good to go, I think. That's me. Counting more than 5 years now just in hot forex, and in total 8 in the industry, in the forex industry. So this is what we covered today, but let's go to the oops, why is not presenting? Come on. Sorry. By the way, just to remind you that this recording, this webinar is being recorded, so you're gonna receive also the recording as well. So this is what we're gonna cover today: understanding what the Fibonacci numbers are, the ratios, where does the trend start, and where is the next level, how to analyze the price movement and the Fibonacci with the Fibonacci retracement. The coalescence and the clustering, what is important of the cluster, what is the importance of the cluster, Fibonacci level, Fibonacci expansions, rejection levels, confirmation levels, and so on and so forth. It's an easy busy. It sounds a bit more, a lot, but not. Once you understand the Fibonacci, it's like you're riding a bicycle. Okay, so don't worry about it. Just a bit of a history. bit of a background, a bit of a determination. I think you know, or you have heard once in your life the name Fibonacci. Okay, it's the father of maths. Is the father of this theorem. This it's the father of these numbers, and his name was actually his nickname was Fibonacci. So that person, this is Leonardo of Pisa. Okay, he's an Italian mathematician. He is the one that discovered Fibonacci's. So the Fibonacci's are some numbers, guys. Okay, just very, very briefly, are some numbers that they correlate. They have they have a meaning, they have a sequence, and I will explain now the sequence. But this is the guy, this is the one of the fathers of mathematics. He discovered the Fibonacci sequence. He named them after his nickname. Okay, he was an Italian, as I said. So in 12th century, he brought to Europe this number system, which we use. So as we use today, and this sequel help us in a lot of applications, in planning poker, in discovering pseudo-random number generators in music, in nature, as a conversion factor, in topology, in optics. So it's not just something random. It's not just some numbers that they are correlated to each other. They have been used in computing. They have been used in coding. They have been used in optics, in music, in order to discover some other things. So it's a sequel of numbers, okay? And what's the correlation? What's the relation? Is because in this sequence, if you add the two numbers that they are next to each other, you can get the third number. So if you add any of these two numbers that they are next to each other, you will get the following one. So 13 plus 21 equals to 34. 34 plus 55 equals to 89. 89 plus 144 equals to 233. And that is infinitive. This sequel is infinitive. Michael, the link should work. I mean, you just copy the link, okay, that I just gave. You copy the link. Okay, you copy the link, and what will appear, it will be, okay, come on. It should work. Let me open the link as well. So yeah, I can see that the link is working. Actually, the weight transfer website will appear, and it will say to you, ready where you are used, so you can click download, and you can download the PDFs. So if the link doesn't work for you, you need to clear maybe the cookies for your PC. So it's a PC problem, because the link should work for sure. Even if the PDF doesn't work, the link, the second option that I provided, should work. Okay. And I can see that a lot of other people have managed to download the link, so it is working. Okay, so check your cookies. I cannot really help with anything else, I'm afraid. Yeah, clear cookies and try the link again, or try the link in a different browser. Use Google Chrome or Mozilla or Internet Explorer, or check it on your mobile phone and download it on your mobile phone, but it should work. I mean, it does work. So I need to keep going. Okay. Yeah. So yeah, this is for the Fibonacci where we left it. So yeah, this cycle goes up to infinity. Okay. So yeah, Fibonacci has been used. This Fibonacci cycle has been used to calculate a lot of things. One famous thing that has been used is to calculate rabbit population growth. How the rabbits, how we can predict the rabbit population in, let's say, 100 years from now. Okay, so it's a cycle that can be used in order to predict future based on the statistics and some parameters. If you cannot copy the link, type it one by one. we.tl/t/slwd. Sorry guys, I cannot help with anything else. So we'll keep moving on, okay? So yeah, when it initially appeared, when the Fibonacci cycle initially appeared, it was in India. It was outside, to be more precise, India, and it was used in a book called Liberace. It was the very first time that Fibonacci cycle appeared in 12th century. 1202 to be more precise, and it was used for calculating the growth of rabbit population. So Fibonacci, guys, considers the growth of a hypothetical, idealized, biologically unrealistic rabbit population, assuming that newly born pair of rabbits, one male, one female, are put in a field. The rabbits are able to mate at the age of 1 month, so that at the end of the second month, a female can produce another pair of rabbits. Rabbit never dies, and a mating pair almost always produce one new pair every month. So this is how it was initially we initially see the Fibonacci cycles being published, okay, and being discovered and appears for the very first time, with the expectation of with the estimation of rabbit population. How long will webinar be holding for? Hopefully it will last an hour. So let's move on. This is some of Fibonacci cycle application. It is used in economics. It is used in computing. Okay, so important is the computational runtime analysis of F-clipped algorithm. Okay, so it is used. It has been used for coding, for computing. It used as a methodology. It has been used on planning poker, on network topology, as I already mentioned, for parallel computing, for conversion factor for miles to kilometers, in optics, when a beam of light shines at an angle and reflects a path, in music, a system of composition developed which used Fibonacci intervals in some of its melody. In nature, so we can see Fibonacci sequence appear in biological settings, branching in trees, arrangement of leaves on a stem, the fruitlets of a pineapple. Because remember, we have seen fractals. So fractals actually are based on Fibonacci retracement. Okay, here it is, the Fibonacci cycle in nature. In the way we are born, in the shape that our body takes in the belly of our mummies, in our fingerprints as well, anywhere. The geometry of the waves, the weather over here, uh, everywhere. Why is that? Why I'm showing you this shape that looks like a snail, the shelf of a snail, because here we are. Fibonacci is based it's been represented, the Fibonacci ratio. I don't have it over here. No, the Fibonacci ratio is demonstrated. It could be shown with this shape when the uh, so the distance of this, if we measure this length, this distance, it will give us by summing these two squares, it will give us the area of the third. And if we sum this with these two, it will give us the area of this one. It will sum this with this, will give us this one. It will sum this with this, it will give us this one. And this is how the Fibonacci cycle, from just a cycle of numbers, it could be interpreted in a shape. Okay? So very briefly, just to move on. So you can see this cycle, these measures that it has been observed in several things in life. Even our shape has a sequence, and it's based on the Fibonacci sequence. So if we sum the distance from our head down to the eyebrows, okay, it's somewhere like, and if we sum, sorry, if we sum also this length with, it will be the same length. By the way, the head up to the eyebrows will have the same length as if we measure from the eyebrows at the end of our nose. So these two will have the same shape, the same length. Sorry, same length. Okay. So if we measure the distance from our nose up to our lips and sum it with the distance from our lips up to our chin, it will give us the same number as the distance from the eyebrows up to the nose. So everything. So if you can, okay, I'm not gonna go through this because it's getting lengthy. But yes, if you want to have a look, I gave you the PDF. So everything is following the theory of Fibonacci. Okay, the golden ratio. Okay. Even the artists and the designers and the architectures have used Fibonacci cycle in their shapes and creating their benchmarks, like Toyota, like the Apple, etc. And Fibonacci can be seen also in other parts of our body. So the ear, the whole head, nose, lips, and etc. Okay, it's just a demonstration. But now we're gonna move to a more interesting part, which is finance, and this is what we care about, right? So how Fibonacci could be used and how it could help us in Forex industry in technical analysis. So in finance, Fibonacci retracement is a method of technical analysis for determining support and resistance levels. Okay, or placing stop loss orders or target prices or counter trend trading, etc. So they are named, of course, after their use of the Fibonacci cycle. That's why we name this tool as Fibonacci retracement. So the Fibonacci retracement is based on the idea, guys. Why we have just figured out this tool, and we said that there is the Fibonacci sequence could be identified in technical analysis, because Fibonacci retracement is based on the idea that markets will retrace a predictable portion of move, after which they will continue to move in the original direction. This is the idea. The idea is that markets tend to retrace a part of the overall move before they continue to take the original direction. And this is true because every action has a reaction, right? And every extreme move, it needs a bit of a correction and a bit of a pullback before it continues in the same direction. So this is the idea behind the Fibonacci retracement. So Fibonacci retracement is created by taking two extreme points on a chart, right? And dividing the vertical distance by the key Fibonacci ratios like that. So we're taking two extremes, we connect them, and we are taking these two extremes and we divide this distance based on the key Fibonacci ratios, which are, so 0 is the start of the retracement, 100 is the complete reversal to the original part of the move, and in between we have the golden ratios, which is at 23.6%, 38.2%, 61.8%. So once these levels are identified, horizontal lines are drawn on these levels, okay, in order to help us identify possible, as I said, support and resistance levels. But before I move on and demonstrate, okay, before I move on to demonstrations, Emmanuel, if you are still here, if you're in a hurry, it's okay. You can go. Anyway, you're gonna receive the recording, so don't worry if you're in a hurry. You cannot really stay until the end of the webinar, okay? Okay, so let me continue. So before before I demonstrate, I would like to clarify that something. So not only this sequence, these numbers are important in the technical analysis. This is not just it. Remember, I mentioned that the Fibonacci sequence goes to infinitive, right? So we have also other numbers that are important other than these ones. So this sequence is not all that important. Also important are the adjacent terms that poses an amazing proportion, roughly at 100 and 1.618, or its inverse, which is 0.618. So, okay, let me take it step by step. So, the most important out of all these numbers that we can see in the Fibonacci retracement is the 61.8. This is the most important key Fibonacci ratio. This proportion, this percentage, is also known by many names. It's also known as golden ratio, or the golden mean, or PHI, or the dive proportion, and etc. Why so important? Because it has been discovered that by dividing how it has been discovered, this number, the 61.8, it has been discovered by dividing one number in the series by the number that follows it. So every time that you divide any of these numbers, so let's take 34, okay? If you divide 34 with the next one, with 55, 34 over 55, it gives you 0.6188. It's a 0.618, so 61.8%. If you divide 233 over 377, it will give you again the same number. So if you divide any of the numbers that exist in the Fibonacci sequence, if you divide it by the one that it follows, it will always give you the same number, this golden ratio, the 61.8%. This is why it's named as golden ratio. and it's the most important out of all these, the most important number out of all this. Okay. Okay, over here I'm presenting how the rest numbers have been identified, but keep in mind that the 61 point is the strongest and the most important key Fibonacci retracement level in the in a technical analysis. So obviously, in order to apply and use Fibonacci retracement tool in our technical analysis, obviously we need a trend, because let's not forget that in order to apply Fibonacci we need two extreme points, right? So we need a trend firstly. So you shouldn't actually apply Fibonacci if you don't have a trend. And when we mean a trend either in any time frame. So if you are a scalper and you're trading 15 minutes chart, if you have seen in your 15 minutes chart a trend, use Fibonacci. If you are a day trader and you have seen a trend in the daily chart, yes, use Fibonacci, and so on and so forth. Okay. So you need to apply it from the start to the end of the trend. Okay, so you need to find a trend with a start and an end. If there is no end, you cannot really apply the Fibonacci. If I mean by saying that there is no end, I mean it hasn't ended, it hasn't stopped. It keeps moving in the same direction, so you don't need the Fibonacci. Obviously, it will move on the same direction if there is no end. By the way, I would like to remind you that Fibonacci retracement tool is just a measuring tool. Okay, just a measuring tool. What does it measure? It measures, actually determines the likely levels the market may hold and rebound within a trend, and suggest to us how big the next move may be. Okay, so determine potential levels that the market may hold and rebound, and what the possible next move might be. So you need to be very, very careful with it. If you are wrong about the trend direction, okay, your Fibonacci levels will be wrong as well and meaningless. Okay, so you need to make sure that you have applied it in an appropriate way and in a trend okay. So you can never know if this particular move is a Fibonacci retracement rather than a reversal, okay? Because Fibonacci will help us only to measure it as if it is, okay? So if our asset is declining, it's in a downtrend, we're gonna apply it from the top to the bottom. If our trend is an uptrend, is moving upward, we're gonna apply it from the bottom to the top. Okay, so from the left to the right. So demonstration when measuring a downtrend from point 1 to point 2. So as I mentioned, once we have a downtrend, we measure it from the start of the move to the end of the move. Okay, here we are. Even though I think by mistake over here, did I use it correctly? Yeah, I did. Sorry. Yeah, I did. So yeah, I did put it correctly. So yeah, you need, since a downtrend, you will use your Fibonacci from the top to the bottom. Okay, so and we can see that some horizontal levels have been created, which represent Fibonacci levels. Is it 76.4, the 61.8, the 50%, the 38.2, and 23.6%. They are all Fibonacci levels. I have stated in the previous slide how these are calculated, but you don't need to worry about it because these are given are already by default on the Fibonacci level. The only thing that I have added is the 76.4. Okay, because I wanted an extra, so feel free to add it if you want the fourth one as well, fifth one as well. So I have put it, I have the beginning of my trend, I have the bottom of my trend, because since then we are seeing it moving upwards. So I have applied my Fibonacci in order to identify possible support and resistance levels, right? And indeed it gave me these 1, 2, 3, 4 levels, and I have put a fifth one as well. This possible, in this case, possible resistance levels, okay? Because if it was gonna continue, if it's gonna rebound and extends higher, would be resistance levels. So each of these levels are associated with one of the above ratios of percentages, okay, indicating the percentage is how much of a prior move the price has retraced. So since we have seen the price moving up and retesting this 23.6 level, what that means? It means that over here, the asset, we can say that at that day on the 60th of August, the cable, because it's cable, is pound dollar, cable managed to reverse 23.6% of the losses that we have seen since July. So it gives you back, it indicates you the percentage of how much of a prior move the price has retraced. Okay, so the direction of the trend is likely to continue, right? It might resume the original direction and move back down again. So that's fine. The breakout of that zero level will give you an indication that, you know what, okay, it will continue moving down. So that's not necessarily bad, right? Okay, because it might happen. It might need just a correction. It might found again the strength to continue further to the downside. So the breakout of the zero level implies that the asset will continue on its initial direction. But the breakout of these resistance levels implies that we're going to see a reversal of this downtrend to the upside. So in this chart, what we are seeing is like a continuous retest of the 23.6. So we don't really have something significant over here. We don't have a clear direction whether this downtrend will be converted into an uptrend or it will be just a correction before it continues to the downside. So, but we have applied Fibonacci because we want to start monitoring this asset and to identify breakouts, potential entry levels, and potential target levels, right? So have in mind, guys, that the 23.6 is a very, very weak Fibonacci level. So even if it break it and breach it, and etc., is not an entry level, because 23.6 is the weakest Fibonacci retracement level of all. Okay, so we tend to ignore a bit this level. Okay, but that's only the only one that we ignore, because the rest are very, very important. You should have in mind that um, remember that the Fibonacci levels are shown as percentages, right? And they are percentage of the total move. So if we have a trend and the asset has returned back to this trend, the 50%. So in this case, let's assume that the asset from over here it managed to breach the 50%. That means that the asset has reversed the 50% of the losses that we have seen since July. So 50% retracement is an important level, because it represents that the price has retraced halfway back. So this if this has breached and broken, now from resistance, it could act as a support, depending, of course, on the trend. So the retracement levels tell us how far the pullback could be or the correction could be. So the 38.2, the 50%, the 61.8 are the most commonly used levels that the price could retrace back to. So in the chart over here, you can see that it hasn't yet managed to breach these levels. It's at 63.6, so it hasn't really given us anything significant. But let's see the next one. Actually, okay, I have a better example over here, but let's, this is how the uptrend looks like, connected the bottom to the top, okay? But okay, in this case, we have seen that it tried to return back down, it didn't manage, and until it managed to break back to the upside again, we can see that we have a signal that the trend will continue in the same direction, which is the upside. So that signal came on this initial break up and this confirmed breakup. So that was an indication over here that we could enter long because it broken the top of the trend, of the initial trend, and it extended higher. So in this case, the Fibonacci levels haven't really helped us identify a reversal entry, but it helps us identify the continuation of the trend. So this is, however, the most important example, because over here we can see how we could use these Fibonacci levels as entry points, target levels, and so on and so forth. So over here, okay, which I have it a bit, okay, let me demonstrate it live for you. So it's the dollar Swiss. Over there I'm using the dollar Swiss, so I will use the same example with a white template. So let's use the same. Let's get back to 2019 like it was in the example. So here we are. What's that one? May, June. Dollars. Oh, I'm using this the wrong chart. Dollar Swiss. Yeah, it was dollar Swiss. Here it is. So in this case, it was a downtrend. Oops. Let's do it blue. Okay, here we are. So it's the same example as in the slides, okay? But I have made a mistake in the slides and I put it down here, but the initial trend was up to here. So that's why I want to demonstrate it live. So here we are. I have connected I have started from the top to the bottom. So here is the Fibonacci level. So what we can see over here, we can see from this chart that we have applied the Fibonacci tool, okay? And let's assume that we have seen this. Let's assume that we have seen this over here. Let me zoom in a bit as well. Okay, here we are. We are in a continuous downtrend, so we connect them, and we are seeing the market rebounding. So it rebounded, it turned back down again until eventually broken the 23.6. Okay, but as mentioned, if you remember that the 23.6 is not a strong signal. Don't worry, Ugo, don't worry. You are a bit late because okay, but anyway, we have the recording, so don't worry about it. You have the recording, so you can take it from the very beginning. So here it is. We have applied. Remember, if we're in a downtrend, we apply Fibonacci from top to bottom, from left to right. So we have seen the asset and we keep monitor the asset. We saw that it rebounded, then it turned back down again, then it broken with this daily candle, the 23.6. But remember, 23.6 is not a strong Fibonacci level, so we cannot use it as an entry. I mean, the breakout of the 23.6, it wasn't a potential long entry point. So what we were monitoring is whether we're gonna see the asset breaking the 23.2, which eventually did with this candle. So that was a potential long entry level. Okay, you could, in this case, you could have set a pending order stating that if my asset breaks the 0.99 and moves up, open automatically a long position with which targets. Can anyone tell me which are my targets will be? My target, to be honest, will be the next Fibonacci level. So in this case, you can use the next Fibonacci level as your target level. These levels, the Fibonacci levels, and more precisely the 38.2. Yes, both 50% 61.8 as well, depending on the momentum as well, if there is a big moment. Or you can use both, guys. The 50% of your position to be on the 50% Fibonacci level, and the rest, 50%, will be on the 61.8. So just to be on the safer side, dear Michael, okay? Because up to the 61, we are referring to nearly 126 26 pips move, which is a big. So yeah, you can enter. We can have two positions, so two target areas. So yeah, what I was saying, that these levels, the 38.2, the 1561, could be used as potential price entries because the price tends to it tends to move on those retracement levels. So which of all these, how let's say, how to choose the correct level to enter? There are many ways to do that, okay? To choose which retracement level you can use to enter. So I'm getting back here. So you can take the aggressive entry. So aggressively enter as the price reaches each level. So as it reaches the 38.2, enter long with target at 50. As it reaches the 50, enter long with target at 61, and etc. This is one way you can enter. You could enter at each retracement level, placing a stop loss on the other side of the Fibonacci. So as soon as the price reaches the 38.2, you can enter long with target at 50, and you can set your stop loss at the other side, which is the 23.6%. If your stop loss is hit, you simply enter again at the next level and carry on until the price goes back in your favor. This is the aggressive way of finding entries using the Fibonacci tool. Okay, so sorry. Another way to do it is to wait until the price finds support on resistance at these levels first, and then enter. So to wait a bit until the price finds support or resistance at these levels, okay? Such as in this case, you see it breached the 38.2, but it didn't extend higher. It put back a bit, so it was trying to retest the 38 to break the 38, but it didn't. So it kept retracing, it kept retesting. So it found this level as a resistance, and as soon as, so we need to wait until the price finds resistance at this level, and wait for the price to move back on the original direction. So the original direction was that one, right? It boosted up. It didn't manage to break it. It was retesting it, retesting until it break it. So another way, a more conservative way, is to wait until the price finds support and resistance and until it move and manage to break it. So you can enter once it break it. It's important to note that Fibonacci is not a trading system itself. It has to be used in conjunction with a with a trading system, right? So you can not use Fibonacci on its own. It's good to have either some momentum indicator or maybe, I don't know, MACD, RSI or fractals and etc. Because you see, I'll put 50 over here. So let me put 50 so you can see I'm using RSI and I have fractal as well. In this case, it's broken 23.6, so we have an upwards move, retested 38.2, 1, 2 for 3 days in a row until it eventually broken it, right? Over here. But at the same time, we have other signals as well because it broke also this fractal. And we have seen also that at this breakout, we also have seen RSI moving above 50. So we had more than one things indicating that it will continue to move upwards to the next retracement level. So that was a nice entry with target at 50% and 61.8. So indeed, it moved up. It didn't manage though to retest the 50%. It came back down, retested again the support level, the 38.6, 33.6 level until eventually breach the 50% over here after 1, 2, 3, 4, 5, 6, after actually 20 days, nearly 20 days until it managed to breach the 50%. Okay, so retested it once, retested it twice until it managed it managed to breach it. You can say, but Andre, it took it 20 days. Yes, okay, but I'm in a medium term analysis. I'm in a daily chart. I mean, daily charts need patience, need time, okay, and need an appropriate risk and reward ratio as well. But even if you fail, okay, even if you fail, because you can say, Andrea, there wasn't a good position. I will agree with you because it took too long. It retraced as well quite sharply. So it might kick me out from my stop loss. It might reach my stop loss. But remember what I said. There are two ways to use Fibonacci. Even with patience until you found support and resistance levels and wait until you enter, or with aggressiveness. So if your stop loss is heated, it hits your stop loss, like in this case, okay, like in this case, where we have entered long, but it didn't breach 50, turned back down to 23.6 before getting back up to 50%. In this case, if our stop loss was heated, what we could do is simply enter again, okay, at the next level and carry on until the price goes back in your favor. So what we could do, we could have many alternatives in this case. So we have entered long, okay, it went up, it didn't manage to reach our target, it moved down, okay, move back and close below the 38.2. So in this case, you can enter another position, but a long position, a short position with target at 23.6, or you don't want to take the short position and your price is still on, your initial long entry is still on, okay? But it was closed. It hit your stop loss as soon as it went down below the 23.6, right? So since it came back here, your stop loss was hit. So your initial long position closed with loss. So what you can do? What you can do is now wait a bit until it comes down, wait a bit to see whether it will rebound again. As soon as you saw it appreciated with this bullish candle over here, okay, you can enter again on the same direction. So if your stop loss is hit, you simply enter again at the next level, which is in this case is at 23.6, and carry on until the price goes back in your favor. Okay, so indeed it came up in our favor the next 2 days until it reached our initial target. So this is the aggressive way of finding entries. Okay. Yes, you can, Emmanuel. There will be recording available. Don't worry. Okay, Fibonacci is not only good in a daily uh, uh, time frame only. It can be used elsewhere, anywhere. I mean, if you have seen a trend in a 15-minute chart, here is a 15-minute chart. If you have a trend, yeah, go for it. So apply. Okay, I have a downtrend. Okay, let's monitor what's going on. Okay, went to 23.6. It didn't manage to break it. Again, came back down. It tried to retest it again. It broken it. So let's see. But failed again. It came back. And I keep monitoring until I see this that it managed to rebound from 23.6 and broken the 38.2. So that was a nice entry with target at 50 and 61, right? So you don't need to be, if something doesn't go good, you don't need to be disappointed because you can enter again and break even, or you can enter again and get back of what you lose and even profit more, okay? Because there are two ways of entering the market. Either the aggressive way, in which if your stop loss is hit, you simply enter again at the next level and carry on until the price goes back in your favor, or wait to see a decisive breakout, strong level, strong breakout, and um in combination with other trading tools. In this case, it was the expansion of the Bollingers, the breakout of the previous fractal, along with the RSI breaching 60, nearly 70 level. So that was in conjunction that we have a really strong move. So the requirements is to enter as soon as the price reach the level. If you're late, then it's over. You need to wait for the next opportunity and wait until the price finds support or resistance on these levels first and then enter. There are two ways to do it. This is another example. It's a daily example again, but it doesn't mean anything. It's just it was an easy way to find the example to show you. But as you can see over here, we have just shown a 15-minute chart in Swiss. So it can be applied anywhere. So, okay, and it can be applying an upwards or a downtrend. So over here we have what? We have an uptrend. Let me see. Connect. Okay, came down to 23. It came down but never managed to breach the 38. So it cannot be used to take an entry. It continues sideways. Okay, until it broken 23 and eventually broken 38.2. So that was a nice entry with target of 50% and 61.8%. Let's see whether it hit the second target as well. Yes, it did. And it continued moving further downwards. So now we have a new trend. So let's add a new Fibonacci from top to bottom. So let's see. Up, sideways, never breached 38, but it was keep retesting it. Up, down, retesting it, and many dodgy candle over here. So that's not a confirmation. It's not something that we can trust. It went down, sideways, big candle, breaking the 23.6, but didn't broken the 38 until it eventually broke it, but it didn't manage to breach the 50%, so it came back down and so on and so forth until eventually it managed to go in our direction. So you see, even if you got it wrongly, I mean, you could have entered over here on the breakout of 38, but it failed to breach your target and came back against your favor. What you could do in this case is open another position, but in a downwards position, a short position with target as 23.6 in order to break even with this false alert. And then as soon as it breached again and broken the 38.2, you could open again a long position. So you need to be fast, okay? You need to be fast. So, okay, by the way, you can add these extra Fibonacci levels that I have put. So I have the 76.76, sorry, I have the 76.4, okay, and the very next one will be the 85.6. Okay, guys, just in case you want to add it. So what you do is right click on your indicator. So not properties, so right click indicators. No, sorry, not indicators. Come on. Right click, it should be objects. Right click object list. Click on the Fibonacci, edit, and by click add, you can add the new Fibonacci levels if you want more Fibonacci levels. So what I have done over here is adding the 85.6 and the 76.4. Okay, let's get back to our slides. So another demonstration. We were in a downtrend. We have put out a Fibonacci. We had a rebound, breaking the 23.6, breaching 38.2, but didn't really manage to give us a nice entry point. It came back down again, breaking the bottom. So that was a sign that we might see the initial trend to be resumed. But we had the breakdown, and the very next day we had a bullish candle. So it was the very first indication, but it was a question mark because you see there wasn't a continuous decline, so we couldn't really trust this signal. But it was something that we have put in our watch list. Then it moved up, 1, 2, 3, 4, 5, 6, 7, 8 consecutive candles until the one that it breached and broke in the 38.2. So we could enter long with target at 61%. Indeed, it breached the 50%. It corrected though afterwards before breaching the 61.8. So you should add your stop loss either at 23.6, or if you are seeing this sharp decline, so with continuous negative candle, you could use trailing stop. Okay, you could use trailing stop or shift it a bit. It breached the 61.8, and then we have been in a new sell-off, which we managed to breach and break the previous bottom, and that was an indication. These two consecutive candles, actually the many consecutive candles, was an indication that is ready to resume the decline. So there are a lot of entry points, as you can see. What do I mean? One entry point was at 63.6. Another entry point was on the reversal. So we have seen that this is a key resistance which fails to break it, and it went back down and broken the 63.6. So we could have entered short with the bottom as our target. Or on the rebound of this bottom, we could have entered long over here with target at 23.6 and 38.2, or we could enter at 38.2 with target at 50%, okay, and 61%. On the reversal, again, this decline, this big candle below the 38.2 could meant that we could open a very a short position for a small period with target as 23.6. So there are a lot of things that you can do. Okay, another one, an uptrend this time. So here it is in larger. We had an uptrend. We have connected the bottom with the top. We have seen a pullback, sharp pullback down to 23.6 and down to 38.2. But over here, we have seen the asset moving sideways, I mean, rejecting the 38.2. So it found some kind of a support over here. So because how we can say that the asset found support? Because for some consecutive candles, we are seeing that it fails to break that level. So it came back aggressively down, but it stopped over here. The next day it was a bullish one, but without really breaking the 38.2. The next one was a dodgy one. The very next one, again, it tried to break the 38.2, but didn't manage. So this is when you see the asset retesting in several days or several sessions a level, that means that it found a support, or it found a resistance. So in this case, it found a support at 38.2. So that was a very, very first sign that we might see the rebounding. Indeed, it rebounded. It broke in 23.6. So the rebound on the breakout of 23.6, our eyes should have been on the top, because that would mean that uh, uh, another rise, a rebound started, because you see we had higher highs, higher lows, breaking decisively the 23.6, finding support at 23.6, and until eventually break out the retested back, went back to the top. That's why if you use Fibonacci with some other tools, uh, you can still use it even if the asset moves on the same direction as the initial Fibonacci level. So now we have a pullback, broken again the 23.6. So that was an entry level. We target at 38.2, right? It came up, but then it failed to break the 23.6. So it came back down again, broken the 28.6. So another entry opportunity with targets at 50 and 61%, which indeed it breached. Even if you missed this opportunity, you have the chance to enter short at 50%, because it broken it. So the next target would have been the 61.6. Now has rebounded away from the 61.6. By the way, it is not wise to enter short at 61.6, because 61 is a very, very strong retracement level. So usually, the most of the time, we're seeing a strong rebound away from 61.8. And this is what happened over here as well. So the return back to 38.2 was an indication that an uptrend might start. So the fact that we had this bullish candle with the asset managing to break the 38.2, but not only that, but also holding above the 38.2 for 1, 2, 3 days in a row. That was the very first indication that it found support, so we'll continue the upside. And indeed, that bullish candle confirmed that. That was a nice entry level over here, with targets at 23.6 and at the previous top. Another entry on that bullish candle over here, and so on and so forth. So it's a way for me to explain that you don't need to be disappointed if you use Fibonacci and you've been stopped out, because you need to keep monitor the trend, because there are more and more and more and more entry levels, possible entry levels, in order to break even and profit at the end, even if you have done a mistake. Okay. Also, let's move on and finish our session with the Fibonacci extensions. We have spoke only for the Fibonacci levels, but if you check closely, you can see that there are also some extensions above the 100 level. This is that even if we have a really, really, really strong trend, which has actually broken the top of our initial trend, and it keeps moving up, then we have more target levels. Okay, so Fibonacci extension is an extension of the original Fibonacci tool. So it shows you where the price could go if it continues on the same direction. So you can use them as potential target levels. Fibonacci extension tool does not provide us with levels where market is likely to turn lower. It gives us only target levels. Okay, so traders can use these trade targets to exit position partially or completely. The ones that you should use mainly, it will be the 138 and the 161. More than that is a bit very extreme. Okay, so these are the most commonly used. So here another demonstration. Okay, so we have seen the asset. We have seen the asset having a bottom over here, then rebounded, breached the B level. Okay, it turned back down to C, so it looks a bit like a wave, right? And then it went back up again, right? So what I have done over here, let me find the exact same example, is OZ for our chart. Okay. Can I find the exact same example or not? Okay, if not, I'm gonna demonstrate a new one. That's it's not a problem. Okay. March should be okay. Cannot find the same. Okay, never mind. Okay, let's use that one. So it was in a downtrend, it bottom. Let's assume that this is the A level, then it rebounded to B, then turned down again. So let me put some lines. So this is the A, this is the B, top, then this is the C, okay? This is the C. Now here, so what I will do, apply my Fibonacci in this initial rebound, okay? Okay, it came back down to the 61.8 and rebounded away from the 61.8. So now I'm gonna shift my Fibonacci. I will keep my Fibonacci and take it, shift it to the C level. Okay, but I have done a mistake. I will revert it. Ooh, no, where is it? Where was it? Where am I? Come on, where I was? Come on, I lost it. Oh, sorry for that. Where I was? Come on. I was having demonstration. I was over here. So, okay. Okay, because I want to get my Fibonacci extensions as well, I'm putting I'm putting on the opposite way the Fibonacci. I put it from the top to bottom, okay? Because I want to see this extension. So it was A, it breached B, it went back down to the 61.6, and it went on the same direction. Now I'm shifting Fibonacci, take it in order my bottom to be on the C level, like this one on the C level. Okay, so, and why I have done that, because I saw this rebound. So I wanted to check whether I have a new trend. And indeed, it appreciate. It crossed and broken the B level. So that was B, right? That was B, and that was C. It broken it. So that was the breakout of B. It was a nice entry level, right? Which was also, so the breakout of B was over here, which also, it was the breakout of 61.6% as well. So that was a nice long entry with targets at 85.6, at 100, and if those broken, we had also the 123 Fibonacci extension and the 161. So let's see what happened. It went up, it breached the 100, it went back down to the entry level, it retested a bit the 61.6, and eventually it breached the 123, and it breached also the 161 as well. So it didn't breach the 161, but it did broken and breach the 123, move up, and it failed to breach the 61. But if we have stopped out at the regional level, we could have gained also this as well. So you see, I used I put vice versa the Fibonacci. If you have seen my Elliott wave, you can see why I have done that, because of this A, B, C, D, E, and etc. Never mind. Yeah, so the breakout of the B along with the breakout of the 61.6 could open a long position, could trigger us for a long position with targets at 100%, or if you want closer because your risk and reward doesn't allow you to go that high, you could use 88.6. And then we could either add more long positions with target at 60 at 123 and 161, or wait to see whether it will break the 100%, and as soon as it breaks the 100%, you can enter long with target at 123 and 161, and etc. Okay, so that's another way to do it. But this way, if you're targeting 161, it needs a bit more patience, so you need to because it tends to retrace before it finally breach the 161. So you need to put an appropriate stop loss level on that case, in this case. So yeah, so I have more examples, guys, but it's already 20 past the hour. So this is a vice versa example in a downtrend. So from A went to B, down to bottom, so we have a downtrend. Then it recovered to C. So what I have done, I have measured, I have put my Fibonacci over here, but in the opposite way. So from bottom to top. And I have, as soon as I have C, I shifted it to C. And I was tracking to see whether it will move down or whether it will break my B level, so I could enter short. You could have entered short either as soon as the asset broken the 50% and 61% with initial target at B, and you could take another entry as soon as it broke B with targets at 123 or 138, and if the 138 was broken, you can enter another position with target 161. Okay, I have gave a lot of examples, a lot of possible ways to use Fibonacci and Fibonacci extension. Okay, so I would like you very careful to see these examples that I gave, these demonstrations. Okay, and yeah, if you check them again on yourself, by yourself, I think you will understand why, how to use them. Okay, you don't necessarily ask, you don't, if you have applied Fibonacci, it doesn't mean that it will give you a signal ASAP. Keep it there and monitor it. And if it gives you a signal, fair enough, go for it. If not, wait, be patient. Okay, be patient. In this case, this is an hourly example. So we have seen this decline, we have put the Fibonacci, we're like, okay, rebounded, okay, again, it was moving a bit sideways, but this big decline came, breaching and breaking the 100%. So that was the very first, a possible short entry with the targets on the Fibonacci extensions. Another possible entry, it will have been on the reversal with this this reversal, because the bearish candle came close below the open price of the previous candle, and was at the 61.8. Okay, you can see 38 because I put it on a vice versa, but yeah, that was another short entry position with targets at the bottom of the trend, and so on and so forth. So there are many ways to use it. Okay, so that was the end of our webinar, guys. I covered everything. If you have any questions, feel free to ask. Otherwise, have a look on the recording, have a look on the slides, check carefully the examples, and let me know. Noor Aziz, you said you cannot download the PDF. Have you seen the link that I have sent there? I have sent a link so you can download the PDF from over there as well. Okay. So yeah, let me send the link once again to all of you, in which you can download the PDF. Let me send it. If you cannot download the PDF from the WeTransfer, it means that you need firstly to clear your cookies and then try to download it again, because the most of the people over here has downloaded, so it works. Okay. So let me send the link once again. So here is the link. Please, all of you, please download it. Okay. And if it still doesn't work, please send me an email. So you're gonna receive the webinar in your emails, right? The recording in your emails. And if you have any issues, send me an email at webinars@hotforex.com. Okay. Thank you very much for attending. Hope you're having a great day ahead. And I'll see you again tomorrow. Tomorrow, I'm going to have a Facebook Live, and Stuart is going to have a webinar as well with the awesome oscillator. Trading with awesome oscillator, another indicator. To be honest, I'm not really using it, but it's because I have so many things other that I'm using. But it's a very straightforward indicator as well. So have a look. If it suits you, use it. If it's not, then ignore it. Okay. Thank you very much. See you. Bye bye.